Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, March the 24th. The year is 2021. Let's talk trading. How to pick a method to trade, part 3 with Walmal. And one thing you have to know, when you pick this video, you have to remember this video is for educational purposes only, and your results may differ from mine and from Walmal's. Walmal, those 15 minutes always go by so fast, so what else do we need to tell the traders about picking a method to trade?
Yeah, I think we actually talked a little bit about it yesterday and the day before as well. But, I think one of the biggest things that we have to go and figure out is, when are you available to trade? If you're only available to trade, at certain times of the day, that may affect what type of trade that you can go and get into. If you only have a certain amount of time because you're working still, as they say, for the man, as opposed to doing this full time, you may be limited as to what you can go and do. I've been blessed, and I don't have that limitation, but some folks do. So that may go and affect that. So I'm going to go and ask you the question is, if you were the type of person where you're only available, let's say, in the evenings, what would you suggest for people to do?
Well, once again, depends on the time zone. You're East Coast, I'm West Coast. So in the evenings, I would probably be getting into the Asian market. So if I'm going to trade in the Asian market, and that's going to be my main market, I would definitely be probably trading the dollar yen for one thing. And I'd be looking for trades based on statistics where, I could just pick up a couple of pips each trade, because the yen moves very methodically and very slowly. But it moves. That's the thing. It's just, instead of it moving in 1 minute, it might take it 10. So that, I think, gets down to, you have to look at, as you said, what time of day are you trading? So what market session are you going to be trading in? So, and that will tell you which pairs to trade, and then that will also dictate probably the method. Because if you're in at the early to mid Asian session, you're going to probably want to trade away from the open or take an open cross. So if price is above when you click on your screen and it's coming down to the daily open, you might just short it at the open because price is moving down.
Right. So what you're saying is that maybe a good thing to do would be looking for some type of breakout, a daily open breakout, those type of trades. It wouldn't make sense. It certainly wouldn't make sense to go and try to do your buy zone. I'd rather not your buy zone, your rat zone trades, because we haven't ranged anywhere yet, really. So that wouldn't make sense. So picking a method may just totally depend upon when you're actually trading and so what's going to be available for you. Doing a Walmal trade at that time of day, if you're in the Asian session and let's say you're going and trading the dollar yen or even the euro yen, that could be profitable. I haven't looked at the statistics, but I have no doubt that you probably could make some good money in that time, because that method, is going to be tried and true. It should work on just about every pair that's out there, as long as you're doing during those peak hours as to when that pair actually goes and gets traded.
Yeah, well, that's probably what our trading buddy Stan, because he's using the buy zone, but he does it every hour. And I think he sets it at open plus or minus. I think he had it at 5 pips, and he may have changed it to 3 or 4 pips because he's been posting his trades out on Facebook.
That makes sense, because what you've done is, I know I can only trade at these times of the day. Well, guess what? Knowing that, what I can do is I can go and hone in, and maybe based on statistics, based on what I'm seeing at this particular time of day, I can go and refine my methodology and make it work. Take the method that we know is tried and true, statistically sound, and maybe change it up a little bit to go and fit into when I'm able to trade. Because, I've known folks who've done this where, I'm just going to go and trade while I'm at work. That's a recipe for disaster. Unless you can literally just go and set the trade and walk away, it's usually a recipe for disaster, because now you got a split distraction there. You got to worry about work so that you can go and put food on the table for work, and then you're also worrying about the money you just put on the table there. So that's, that usually doesn't work out well for anybody.
Well, I guess on the flip side, though, let's just say a trader only trades maybe the previous day's high and low breakout. And maybe that occurs during the work. They get an alert on their phone, a text message saying that, hey, price is within 5 pips of the previous day's high or low. So then they might actually put the trade on. Or, before going to work, price is not near either one. They could go ahead and put those orders in ahead of time, and then they could just see if they got hit.
Yep. Yeah, and that makes perfect sense. In fact, I do something similar to that with the daily breakout, and what I do is that, come 7 o'clock Eastern time, 8 o'clock Eastern time, I go and look at the charts, look where things were, and I'll place trades at certain levels above and below where the dailies were, and I just put them out there in that account, and I put a take profit on it, and I put a stop loss on it. And I don't win every day. In fact, my win percentage is much lower than it is when I actively trade. But the nice thing about it is it's a set and forget, and so some days I'll win. There was one day, in fact, it was on Monday, I believe I walked away with 20 pips. Other days I've walked away with 5 pips. Some days I've walked away with minus 10 pips. It's, but what I do know is that over a period of time, it's been successful for me. And that may be a way that, a trader could get in and actually go and make some money and build an account while you're trying to go and learn some other methods and that you could do actively throughout the day.
By the way, did you just take the previous H1 breakout or the Walmal?
No, I didn't. I'm done trading for the day, and so I actually closed my EA that allows me to trade.
Oh, okay. I was just had to check because, what just happened is kind of a perfect example. Selecting a method that's really simple. So, one M5 candle ago, it touched the high and actually broke through and came back down. And if you look left, you can see candle 4 right here. It actually put in that previous H1 high and then retraced. So there was a test, and then this current candle broke it, and you'd be up 6 pips if you had entered that trade right now.
Yeah, it would have been a nice trade, and I include that. I know it's an H1 breakout trade, but I actually call that as part of my Walmal method because before you could actually get to the Walmal line, which is 30, you'd have to go and wait for that trade or for the market to move 4 pips up. That's a big distance to go and cover. So that's why I like to go and take that, because especially you apply the same rules. Wait for the second hit. When you get the second hit, just go in. As long as not a reason to the left not to take the trade, take it. You could have picked up, theoretically, you could have picked up 7 pips on it. Reality is you probably would have gotten out with 5 pips. That would have been real nice.
Yeah, so I
just still be in the trade.
Yeah, so I scrunched the chart down. So at the 30 level, if you look left, it got rejected. I think it was about 6-7 hours ago, and then it broke through about 12 hours ago or so. But if you look left at the 25 level, you see it had broken this area right here on the chart. And so it's like, okay, let's see. Maybe it'll break through and come up here. And that's exactly what it did. So that would have been a nice targeted 5-pip trade.
Yeah, and that's the advantage of going and looking at that, and the thing is, even something like that, you could go and actually put in some parameters, and we're talking about could you do this while you're on a day job? Yeah, that's something you could do, because that analysis, how long did it take you to do that analysis? We just did it literally on the fly on this video, and it took less than 5 seconds. So the only thing you need to do is maybe 5 minutes before, 5 minutes before the beginning of the hour. You put in your trade parameters, put in your entry, put in your stop loss. If you have an EA that allows you to go and set parameters for taking you out of trade, set that up. all of that should take you less than a minute to do that, and you walk away and let it go and do it, And sometimes you're going to win, sometimes you're not, and that's just part of trading. That's always going to be the case. Now, the only advantage you have if you're actively monitoring it is that you can go and and actually usually you're able to squeeze a couple more pips out of it because you're sitting there and say, oh boy, look at that, it hit that level, it's going to have some problems here, let me get out right now and save some of the pips that you won that's on the table. Or you can say, oh, look at this, I'm not in profit yet, it's not going the way I thought it was going to go, let me just go and get out and take it. I think I was in a trade with you earlier today where I got into the trade and it just didn't do what I thought it was going to do, and so I jumped out and took like a pip and a half loss, and you were actually in that same trade, and I think you wrote it out and you got like 5 or 6 pips or something like that. I re-entered the trade when it came back, and it looked like it was going to be a good trade, and then again I got like 5 or 6 pips, but my 5 or 6 pips was 5 or 6 pips minus my pip and a half loss, so I only saw maybe 3 and a half pips, something like that.
I think I only got about a pip on that trade. Because I had gone down, yeah. But back to the topic of selecting a method, and this is something that each trader has to look in the mirror and decide: do you want to put a trade on and pre-plan it, put in your stop loss, put in your TP, enter the trade, walk away? And we touched on this a little yesterday. Or do you want to manage the trade tick by tick?
Yeah, and that comes down to your temperament. Who are you as a person? What are you able to go and do? I'm the type of person where, I know I've told TRO this, but I don't know if I've ever disclosed this, but in high school, they give you all those awards and stuff.
Yeah,
and one of the awards I won was the Thrifty Award, which basically means I was the cheapest person in high school.
Yeah, no, you've told us that one before. But but the thing, see, what I'm thinking though is that some people like to take time, be very methodical, think things out. They're not good at making quick split-second decisions. Where here we're making split-second decisions, basically tick by tick. Is it enter or wait, enter, wait? Is it exit, wait, exit, wait? That we're in that constant decision-making mode. Very few times do we sit back. About the only time I get to sit back on a trade is if I get in the trade and it runs up a quick 3, 4, 5 pips where I have time to move my stop loss to break even plus, or I can put a trailing stop on it and see what the market does. But most of the time,
exactly.
It's finger on the mouse, ready to exit.
Ready to react to whatever the market's doing, and I find myself down in the same thing. And the thing is, for me, I don't mind doing that. To me, that fits home with my personality. Now, I do like to plan things out, and so I say, okay, this thing is, when it gets to the X level, I'm going to be looking really hard as to whether or not I get out that level or not. And usually what happens is it gets to that level or gets close to that level and it slows down and it doesn't blast through it. Boom, I'm gone. But that's my temperament, but other folks say, I'm a little bit more patient than Walmal. I can go and sit there and watch it run against me. I know one particular trader, he'll go up, be up 5, 10 pips and let it go all the way back down, and he'd be, underwater by 5, 10 pips. And because he knows that thing's going to run up to, maybe 20 or 30 pips. Nothing wrong with that if that's your temperament. Nothing wrong with that if you plan your trade out that way. Not for me. I'd rather just put whatever I can put in the bank now. So for me, it's sort of like, I look at things sort of like, the bird in the hand is worth more than 2 in the bush.
Yeah, exactly. And you know what? Once again, the fastest 15 minutes in trading is up. So we'll probably have to come back maybe again tomorrow and talk a little bit more about this. So, fellow traders out there, boys and girls of non-binaries, let me know in the comments in the video how you select your method. What made you pick the method? Because I know there's some traders out there, I see them on Facebook, they're going from method to method to method. And that's why I have to ask people sometimes, are you trading real money? Because if you're doing that, I don't see how you can have any consistency. But just remember and never forget, It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.